Ladies and gentlemen, welcome back to the Opportunity Zone special edition this week. We've got Mr. Chris Lavin live in the newsroom. Chris, you ready to rock today?
Howdy, I'm here. I'm ready. I had some coffee. I'm good to go.
Awesome. Hey guys, there's a ton going on right now. Tax bills, real estate, finance, everything and a little bit more. We're going to encompass over the next 15 to 25 minutes. We've got a lot happening right now. There's a bunch of eyes on the state of Wisconsin. Not for the Supreme Court to vote again. This time, it's because they're hosting the NFL draft there. Huge amounts of people, $94 million in economic impact, are going to be centered around Wisconsin, Green Bay specifically. They've also got the Amtrak, who's making some pretty big waves, and they might make a small city in northeastern Wisconsin kind of the next boomtown. We'll talk about that. We'll also talk about the big, beautiful tax bill. At least that's how they're calling it now in the Senate. It was a name that was coined by the current Trump's administration, big beautiful tax bill, and it's making its way through. It got through the House, went to the Senate. Now we're going to talk about the status of it and the implications it will have on your personal finances, your personal taxes if you do it the right way. All this and more. First, I want to get in and I want to talk just before we get into our actual deals and all the news and headlines. Chris, I'm going to call on you in a second. I want to talk about just a very fast Bible lesson, and this is on stewardship. Okay. In the book of Luke, it talks a lot about stewardship, it talks a lot about how we should basically, instead of treating possessions as if they're ours, we should treat them as if they belong to the Lord and how we can multiply them. Chris, can I throw the ball to you and just ask you what stewardship means in life for you?
You gotta excuse me because I always get pretty emotional, and that emotion comes with gratitude. But several, I guess it's about 10 years ago now. I had a business um, that I acquired, and I acquired it out of a company that was going bankrupt. And one of the people that was involved in the larger company said to me, Chris, you need to pull this company out. You need to go and run with this company. But I can't help you do that until after the acquisition is complete because we was involved in the upper tier company. He was a Saudi Arabian sheikh and a dear friend of mine. He's passed since then, a multi-billionaire. And he said, Chris, you go and do this and I got you. So I went and I acquired this business. I sold everything. I liquidated everything I could to come up with the cash to acquire it before it went into bankruptcy. I think I put like the last 25 or $35,000 on a credit card. That's the way it was. So I get the acquisition all done. I bring the business in-house and I'm broke. Like I've got nothing. And you've got to understand one thing about me is I'm an obedient servant. I try to be a good steward. And if God tells me to do something, I do it. God told me to go get this business. So 3 days after I acquired the business, my sheikh friend in Saudi Arabia, he got arrested. Him and all of the billionaires got arrested by the prince, and they were put under house arrest, and all of their assets were seized. So here I am with all this credit card debt, every penny that I had to go into this business gone, with no operating capital and nobody to help me. And I was like, oh. So I continued to operate in the business and I did the best that I could, shucking and driving to get the business and we got momentum up. And after a length of time, um, I got the business to a place where we were being successful, financially successful. But then we got involved in it with a company in London, and basically I paid up for a bunch of equipment, and the company the next week went bankrupt. So now I owe this money on my American Express, and I paid the American Express, and I'll never forget. It was a Thursday morning. I don't remember the exact date. Again, I'm a faithful guy, and I have a friend, an older friend who's passed since, that I talk to every morning. I called him up and I said, "Hey, Artie, I've been praying about my business this morning, and I think that I've been told to close the business and move on." And as soon as I said it, had an immense amount of peace. Because one thing that you understand is I had several single moms working for me, and those single moms with children relied on their paychecks. And I knew I could make the next payroll, but I wasn't sure about the one after that. I didn't know if I could make the payroll, and I had no income stream. And And I remember I had peace. I knew that's what God wanted me to do. I accepted the fact that it was God's business and God was running the show on this. So I literally got off the phone. I went to this meeting. And as I'm walking to this meeting, a guy that's like a friend of a friend said, "Hey, Chris, I want to talk to you after the meeting." And I'm like, "Sure, John, no problem." So I go in, we do the meeting and whatever. And as I'm leaving, John's like, "Hey, come here." This guy's like 85 years old. And he sits me down and he said, "Chris," he says, "you've been sharing it, over the financial struggles you're going through." And he said, "And I'm a faithful guy." And he says, "I don't have a lot." He said, "But I just sold this piece of property up in Minnesota, and I netted $125,000." And he said, "I prayed about it, and God told me to send you $100,000." I said, "What?" He said, "Yeah." He said, "I prayed about it, and God said, send you $100,000." He said, "Give me your wire information." So I gave him the information. He put that money in my bank account the next morning. I took that $100,000 and I used it to operate on. It gave me the ability to make my payroll, keep those women employed, and the way to go on and sell that business for mid 7 figures. And the minute I turned it over and realized who was in charge, that it was God's business, God took care of it.
Chris, I wish I could have half the faith that you do. The way that you just steward, you don't try to own anything. Like it's insane. It's insane to the average person, but it's very practical. So to kind of wrap around this, it's found in Luke 16:10. Luke 16:10. Treat wealth as God's, not yours. Invest faithfully. Invest for long-term gains, not short-term impacts. And you absolutely did that. You just stuck in there and you stayed in the pocket. Thank you for sharing that story, man.
Thank you for giving me the opportunity.
Well, ladies and gentlemen, I hope you picked up a couple of nuggets from that. We got a lot of news to cover. This is the opportunity zone. So I'm going to start with an opportunity. Those of you that have been waiting for a potential deal, the wait is over. I'm going to officially announce we just landed a killer multifamily deal. We opened this up about maybe 8 or 9 days ago. I was on site up in Green Bay, Wisconsin, where this property sits. It's a beautiful Class A property on the Fox River, right at the mouth of the big old Lake Michigan, Great Lakes. And the thing about this particular property, this particular asset, is that it's when we're looking for places to invest, we're looking for how do we make sure that safely and reliably we can make sure that our investors hit all of the investor expectations that they have. Meaning, how do we double money over a 5-year window? How do we get dividends right out of the gates to pay every single quarter? How do we get a nice preferred return of 6% or more, depending on the investment amount? How do we do all of those things? In today's marketplace, it's been a little bit dicey out there. We've literally looked at hundreds and hundreds of properties, but we've landed this one. And here's the underlying economics that are the most important. Number one, jobs are moving into Green Bay. You've got expansion of places like Georgia Pacific, big manufacturing. They just announced a $550 million expansion in Green Bay. You've got trucking companies moving in. You've got data centers moving in. You've got population coming in too. And I want to clarify the specific population that's coming in. Not only did Green Bay get ranked #1 in the country for best place to live in 2023, and this is on the list with places like Naples, Florida, Sarasota, Florida, et cetera. Not only did they get #1 in the country, but additionally to that, the top $200,000 income earners, so the wealthiest bracket that's tracked on the survey, they are the ones that were moving there. So literally, Green Bay, Wisconsin had the second most high income earners in the country move there over the last couple of years. And that's an incredible stat. So it's not just any tenant base that's moving there, but it's like really good, solid ones. In this building, I got to personally go through every single unit. I met surgeons. There were pilots. There are 16 surgeons that live in this building. Like it's a very, very well occupied property. And the amount of rents that they're paying, they're a little bit below market rate right now. Just all around very, very impressive asset. So when we're looking at buildings, that's what we're looking for: population growth, job growth, all the underlying factors. If you're looking for a potential investment opportunity, we can get you this fancy multifamily CoStar report showing you that Green Bay right now has an insane absorption rate which means that anything that hits the market right now is getting gobbled up. They've got one of the lowest vacancy rates in the country. And unlike some markets that have slipped in their rent growth, Green Bay is still growing in rents. So if you're looking for a potential deal with a lot of upside on it, then look no further than this one. Sue or Doug, if you could drop the link in the chat, the link that's going in the chat right now, what that is that allows you to book a call with us. We'll jump on the phone. We'll get to know one another a little bit. We'll send you any information that you're looking for on the deal. And then ultimately, if this is a deal that you would like to consider investing in, we can see if we can reserve a spot. We have filled about half of this deal already just in the last week and a half since we opened it when I was up in Green Bay. So if you're looking for a potential spot, then know that like spots are filling up right now. Chris, did I miss anything else on the deal that I should have hit?
No, I think you nailed it all. Beautiful opportunity, beautiful building, great place to be. Oh, how close are we to Lambeau Field?
Yeah, so we're 9 minutes from Lambeau, and the NFL draft. The reason that that's important, number one, like Lambeau Field is an iconic place, and everybody lives in Green Bay. It's like part of the culture to be a Green Bay Packer. Well, that's about a 9 minute drive from our property, just across the bridge, just across the other side of the river. And they're hosting the NFL draft this year. And if you're not a big NFL fan, don't worry. I'm not a big fan myself, but the NFL is huge, a lot of eyeballs, and they're expected to have about a $94 million economic impact in that area just from hosting the NFL draft. They'll have 300,000 plus fans in the stadium. They'll have every single NFL football team represented on site. So it's pretty cool, big deal to happen in a smaller market like Green Bay.
Absolutely.
Cool. Well, while we're talking Green Bay, I want to switch right over to the news, and I'm going to break one story on Green Bay, Wisconsin itself, because this is rather interesting that's happening in Green Bay. But they are having studies done right now for the final phase of the Amtrak coming to town. And this would take a route right from their biggest city population-wise, which is Milwaukee. Would take it straight up from Chicago through Milwaukee, straight into Green Bay, and then eventually they'll circle around to places like Appleton and some of the smaller cities. Chris, what do you think about this economically for the city, and just your thoughts in general? Amtrak coming to town for Green Bay.
Just reiterate the path one more time.
Yeah, Chicago, Milwaukee, Green Bay.
All right. So you getting that? Chicago, Milwaukee, Green Bay. So what does that mean? That means that now Green Bay is within suburban distance of Chicago. So we're going to see a movement away from the high prices of Chicago. Listen, this is crystal ball talk, right? But if you think about it, now people are going to be coming to where it's more affordable to live, but still be able to work in the city. This is going to be huge. This is huge. As far as an impact on residential housing in Green Bay and Milwaukee. I think more Green Bay because Milwaukee is kind of on the high side of price too.
Yeah, this is a really cool thing. So if you've never been to Green Bay, this has got the prestige of kind of a quaint little town, but it's got the depth of big business. So you have Schreiber Foods, who's arguably one of the biggest manufacturers of cheese in the country. You've got Georgia Pacific has a huge outlet there. Like you've got a lot of major companies headquartered there. So when it comes to economic activity, Green Bay keeps growing. And that's why they're able to bring in these $200,000 plus income earners, the second most number of them in the country over the last couple of years. So now the Amtrak's coming.
Tax wise and everything else. It's a great place. It's a great city.
Yes. Okay, I'm going to switch over to this thing that the Trump administration is calling the big, beautiful tax bill. Donald Trump made a post saying it's almost here. Republicans negotiated it. They're working nice together. Biggest tax cuts in USA history, getting close. Chris, what does this mean?
It means, yeah, baby. It means a couple of things, right? That means that all of those $200,000 income earners that are sitting in Green Bay right now should start investing in real estate. And why is that? Because one big part of this real estate bill in general is the tax code. I can never say that. The Tax Cuts and Job Act of 2017 reinvigorated to today. Why is that important? It will bring back 100% bonus depreciation in the first year of acquisition of an asset, or the first year you put it into service is a better phrase. So what that means is that allows us as investors to buy real estate assets and use those assets tax benefits or depreciation losses to offset our income in other arenas. So this is huge. This is huge for two reasons. One is it's great for us. The second thing is there's going to be more people coming into our market. I forget who I was watching earlier. They just invested $500 million in one area, and I mean, they're just going gangbusters. Everybody's going to start coming after multifamily for this specific reason. Tax benefits, and now there's going to be a scarcity, so values are going to continue to go up, and you're going to see these cap rates come down. So, bam, it's going to hit us like on the front side and the back side, improving our portfolios all around.
Chris, a question in the chat, and I know this is something you've done a lot of research on, but will this be retroactive? Like stuff that we buy today, do you think there's a chance that this will be included in this whole tax bill?
Again, crystal ball, right? But based on historical performance of these types of acts, especially when they benefit the people that are writing the bills and the acts, yes, historically they've had two other bills, the Tax Cut and Jobs Act of 2017. I think it came in June, was made retroactive to January, and there was another big one in since then, and it was made retroactive to January 1st. So based on historical data, I would say yes. As a matter of fact, I'm betting on it. We're acquiring hard just for that reason. We're going out there and getting these big deals lined up and knocked out.
So we have a client now that named Lonnie came to us. He sold an asset, had a pretty good gain on it, was going to have to pay a lot in capital gains, like a lot.
Yes.
And instead of giving that money to the IRS, he invested it with us into a multifamily piece of real estate. He invested right around 400,000, and he ended up getting back. And I know this, and I can say this because we got to help him get his K1 done from the actual tax man. He ended up getting back around $200,000.
Yep.
The IRS would call that a passive loss. To put it in 10-year-old terms, I got kids. To put it in 10-year-old terms, it's kind of like getting a tax credit. The CPA won't call it a tax credit. The IRS doesn't call it a tax credit, but it can function that way on your tax return. And so that knocked out the majority of his taxable income that year. And so
Yep.
when we're talking about, Chris, right now, like this is massive for people. If this goes through the way that it's been negotiated on the table right now,
Yep.
sometimes I like to poke at Donald Trump a little bit because he's boastful about things, but this one's actually pretty close to accurate. This could be the biggest tax cut in USA history.
Well, here's the reality. It benefits everybody. I mean, it benefits just everybody across the board. So yeah, this is going to be a huge win for everybody.
Yeah. So
I don't mind if somebody posts a little bit if they actually deliver, right?
If this goes through the way that it's going to go through, then the other part of what Chris was just mentioning is that multifamily will start to run up in price, because it's not just about the cash flow. Although we love the cash flow, we love the appreciation over the long haul, it's the tax benefits. And we have to understand that a lot of people are chasing tax benefits. These big pension funds that are managing billions of dollars and whatnot, they're chasing tax benefits too. Like cash flow is great, but tax benefits are sometimes more powerful, especially the wealthier individuals are. So multifamily will start to see a run, and it'll just be grab what you can before it hits the moon, essentially. Okay, Chris, I'm going to change gears on us. I need to talk just for a moment about this sentiment of this a big survey done for folks that are contemplating jumping into multifamily real estate, and their number one concern was rising insurance costs. Now, mind you, the date of the survey, they just published it, like this article just published April 9th, but the date of the survey, it started back in 2024, and they just got it published now. What are your thoughts on this rising insurance costs being something that's on their mind?
Well, last year that was true. Last year interest rates were rising. Around April of 2024, everything was on the rise. But I'm here to tell you, it's peaked. In our experience, our actual transactions today tell us that that's not the case anymore. Right now, interest rates are coming back down. So as a result of economic times, things getting tougher, whatever, interest rates are coming back down. I'm sorry. insurance rates are coming back down. We actually just got some competitive quotes that we, on the Green Bay deal, for instance, we're actually able to acquire a policy less than the current owners are paying. So that's one, for instance. I have real estate here in Florida. We're seeing the same things as we look to reinvestigate or relook at the policies that we currently hold. We're seeing some decreases, 2, 3, 4, and 5%. So while this is all true last year, today not the case. Not the case at all.
Yeah, I concur. So we literally underwrite hundreds of properties come across our desks every month. We probably look at least 70 to 80, if not 100. And a lot of them we were kicking last year because insurance rates were still coming a little bit high. But by fourth quarter last year, we started to see quotes coming down, even in Florida, even in some of the coastal regions. So I think that this survey is exactly that. It's a survey from last year, and it's not representative of actual quotes that are happening on the ground right now. So let's put that to rest. Let's actually, Chris, I think you're pretty good at this, but let's use that in our favor to negotiate better deals because some of the sellers are still holding on to those higher policies. And if we can come in for less, then it makes our cash flow stronger.
100%. 100%. Because they haven't done their due diligence, I'm not going to reveal to them where their inadequacies are. Because for every little nugget or trinket that we have that we can use, it gets a better deal for our investors and gets better benefits for our investors. And that at the end of the day is what we're about, is returning to our investors.
Fantastic. Ladies and gentlemen, that is the news segment for this week. Short, sweet, to the point. We'll be back again next week. If you are looking for a spot to park some cash, we have some spots on Green Bay. We'll be probably promoting this for about the next 3 weeks or so, and then it'll be wrapped up. If you're looking for a potential spot, then the link that's in the chat is yours to click. Jump on a 15-minute call with us. If you're following us on social media and you're like, Nate, what link are you talking about? Then type the word link, L-I-N-K, in the chat. And what we're talking about right now is this potential deal. This is in Green Bay, Wisconsin. It's a beautiful property. It is this asset that literally, it's a Class A building on the Fox River. Let me see if I can pull up an image. Right on the Fox River at the mouth of Lake Michigan. Beautiful, beautiful building. It's 80 units total, and the tenant base is fantastic. We've got surgeons in here. We've got pilots in here. Very good, strong income earning folks, and that their rent is a little bit under market rate rent right now. If you're looking for a nice double-digit return that pays dividends right from day number one, then this is the deal of the year for us. Chris, anything else you want to wrap up with today?
I just want to interject one thing that you didn't mention. This building is 100% occupied right now and performing like a beast. And anybody that's a savvy in the multifamily space tells you that that means the rents are too low. So we'll immediately be able to go in there, raise the rents on the next lease turns, and drop the profits up. But listen, no matter what you do, no matter where you invest now, no matter who you invest with, whether it's with us or anybody else, please, please, please do yourself a favor and do some due diligence. Get to know the people you're investing with. Like I said, if it's not us, I hear so many horror stories about people put money here and they didn't read the fine print and they're not getting. Please be a good steward of what God has blessed you with. And please do due diligence and make sure you know the people that you're involved with so that you can turn your investments twofold or fivefold or tenfold over the course of time. Because God's blessed you with this, and let's have as much positive impact with the world. Much positive impact in this world as we can with what we've been given. God bless everybody. Thank you.
Thanks, guys. Thanks,
See y'all
Chris.
later. Bye-bye.
Bye.